So welcome everyone. Good afternoon and thank you for joining us today. We appreciate your time on a Saturday and we hope you get to take away some key insights on technology investing. The Indian technology space, of course, has gone through major changes in the last few years and has ensured that a major part of our investment consists of companies that, from the tech sector. This includes new age digital companies as well as companies that are more traditional business models but are taking up technology in a big way. There's also, of course, new age technology companies that have listed. This year has been fantastic for Indian technology investing. We've had Zomato, Meta more recently, ATM last week have increased their options in the listed space as well. Indian startups also have raised a record $28 billion this year. It's been the highest raised by Indian startups in any year so far, and more than about 33 startups have entered the unicorn club. Right, as we talk about technology investing in India, we are 100% sure that we'll see some decacorns coming. Our way in the next 10 years or so. So, for example, Flipkart is currently a decacorn. So we have those kind of opportunities coming up. So there's the question then comes to our minds as investors is how do we participate in this strong story that is coming up, that is emerging. And there is no denying that due to fairly stringent SBI listing regulations, if you want to invest in the real innovators of this country, we have to take either the private equity or the venture capital route, and we can blend now that with a blend of listed equity, right? With a lot of startups going public. So with that, I wouldn't like to take up too much of your time today. I'll introduce Mohit, who's managing the ITI Growth Opportunities Fund One. Mohit comes with a vast experience in the venture capital space in both primary and secondary markets. He's led early stage rounds across verticals such as Ecom Express, Grab.in, which is now acquired by Reliance, Local Banya, Humumi, and a dozen other early stage companies. So really great experience there, a lot of depth of understanding on how these deals work and how investing in technology space works, right? Mohit brings a unique ability to connect with and understand young entrepreneurs, also new age technology business models. And Mohit is a passionate Python coder himself. So welcome, Mohit, and thank you for joining us today.
Thanks, Chinmay. Thank you so much.
Thanks, Mohit. I'll go ahead and introduce Satwik as well. Satwik manages the Right Horizons Perennial PMS and comes with a lot of primary market experience. Satwik's been a global investor himself, looking at major valuation trends, monopolistic and fast-growing capital-efficient franchisees. As the fund's name suggests, he's identified several perennials in the past, like InfoEdge, Abbott, Roku, Thermo Fisher, and a few others. He's also previously led the equities asset allocation at one of India's largest multifamily offices, and he was a part of a 4-member team at Elara Gateway Fund as well. So welcome, Satwik, and glad to have you here.
Thank you, Chinmay. Pleasure is all mine.
Thanks a lot, guys, for joining. We really appreciate your time on a Saturday as well. So I'll dive into it, right away without taking up any more time. The first question to Mohit. Do you think startups are really getting easy money these days, or is that something that's changing? And where do you see this whole record raise that we've had, right? 27 billion is not a small amount for startups to raise. And where do you see this going? And why have we suddenly got onto this kind of sunrise industry, if you will, in terms of Indian technology startup space?
Sure. All right. So, Chinmay, before answering your question, I'm going to sort of take a step back and go more into the macros of how India has sort of shaped up over the last 2 odd decades. And as a disclosure to all our viewers and audience here, I'm extremely candid in my views and opinions, and absolutely sort of right to the point. And I may end up hurting sentiments of people or companies which are iconic in this country. But that's just me. And like Raghuram Rajan says, right, I am who I am. So So I'm going to take a step back and probably go back into the 90s when really technology, when India really started building technology, right? The Infosys era or the Wipro era or the TCS era. Uh, we took a conscious call of being a service-oriented country, while China took a conscious call of being a industry-heavy country, which was sort of more in the old school manufacturing space.
Right.
Uh, Over the last 20 odd years, and more so post the dot-com bubble, uh, the internet absorption and penetration across the globe has literally gone exponential. And the last 10 odd years, at least for India, have seen a massive growth in just the number of people who've got access to internet for the first time. We were at sub 45 million internet users in India way back in 2010. We are at close to 550 million today, and we'll probably have a billion plus by end of 2025, 2026, right? We are the largest, one of the largest countries in the world in terms of population. And I think, the record surges that you're seeing in startup inflows here are because the regulatory environment in China is difficult to navigate for most large tech companies. You've seen Microsoft exiting LinkedIn from there. Google doesn't have any presence. Facebook doesn't have any presence. So India is like the final frontier every technology company wants to capture. Jeff Bezos made a very strong statement way back in 2015 when he started Amazon India operations that the 21st century is all going to be India, and I want to be here in India. Whatever money is required, whatever resource deployment is required, we need to be very relevant in India, and that's how Amazon's built it, right? So I think India stands at a cusp of a very interesting inflection point where we have a young population, sub 35 years of age, almost 68% of our population. That population which is willing to consume, is willing to sort of upskill themselves, go up aspirationally, is adopting technology like there's no tomorrow. I mean, look at what we did with TikTok or what we are doing with Chingari and some of the new age video tech platforms. I mean, we are a country full of so much talent, right? And all you need is a potential platform to showcase that talent.
Right.
Amitabh Bachchan, promised you that 21 years ago when he started Kaun Banega Crorepati, that if you have talent to have navigate questions in GK, then you can become a millionaire or a billionaire. Right. I think that same promise is now being given by all the technology companies. If you have talent which is relevant, you can become a millionaire and you will consume as a millionaire, which is why I'm going to build things around you. So I think I think 25 or 28 billion is still very less. My sense is we're going to see at least 100 billion inflow in the next 2 to 3 odd years. And if Nykaa's listing is any sort of precedence to it, the stock in terms of traditional matrices, right, is probably trading at 500 times earning FY21. I think as investors, it's very difficult for you to put a valuation premium to this because what matters is the potential that Nykaa holds, right? When you have 400 million people at one point in time wanting to buy Nykaa, either women or men, that potential that particular company can promise is incredibly high. DMart's something on the similar lines. So my sense is the party's just begun. We are in a magical multi-year bull run in India. Are startups getting funded? Yes, they are, but only the quality ones. I promise you that. There is a lot of froth. There is a lot of random, and the joke in our industry, right, is there are people who are building solutions for no problems that exist. But they think that there is a problem in their mind and they want to go and build that solution on top. Be rest assured, these people are not getting funded. Who are the ones who are getting funded or the ones who are raising substantially large capital? See, going from that, sort of early stage space, right? Today, because of the ample liquidity available, raising your first seed round of 2.5, 3 crores using an angel network or using a clutch of, ultra HNIs with a 5-10 lakh rupee check is easy. But beyond that, when you reach, a pre-series A or a series A level, your revenues, your matrices will fall into place. People will ask you those hard questions. And if there is no product market fit or if there is no GTM, which is go-to-market strategy, you won't be able to raise the next rounds. So I think smart capital is finding its way, not dumb capital into India. And all the 25, 28, $30 billion that are coming here, be rest assured they're going into businesses which are going to be habit forming and going to be path shattering over the next 5 odd years.
Right. And I think there's two really, really interesting things that I found in what you said, Mohit. So thank you so much for those insights. One is, of course, there is a talent-led boom as well. So people are building stuff because there's talent that can think of and imagine solutions and create them and kind of get them into our lives. And of course, on the other side, there is a large pool of people that is now open to these solutions, that are saying, bring it on, right? We want to change our lifestyles, right? So Zomato, for example, has really changed the way we eat. Whether for the good or bad, we'll figure out, but it's changed the way we kind of eat. And there's been so many others, like you said, Nika, has changed the way perhaps women are consuming, or they're looking at themselves in terms of their image, and men as well. So that's been an interesting piece. So thank you for that, Mohit. Uh, Satwik, you've kind of been a tech entrepreneur yourself, right? You've done a startup, and you've of course also invested globally. You've invested in India tech businesses as well. Could you tell us what, Mohit's brought up about a very interesting point. There is this kind of almost like a perfect storm of a great kind of consumer class emerging on one side, who want the benefits of something that is life changing, and great talent on the other side, who wants to build this and is able to build this. And of course, there's capital kind of funding this whole piece, right? How do you see this in terms of your strategy from the investor's perspective? And how do these companies fit into your framework? Is there a framework? Would you look at them in a particular way? How does that work?
Right, right. So my screen is visible, right?
Yeah, it is.
Yeah. So actually around 2014-15, I had founded a health tech startup that got funded. Then we sold it off. So what I realized was that globally across all sectors, profit pools are getting consolidated in the hands of a few monopolists. So if you see like the global tech sector, right, Google and a Facebook in the digital advertising space, I'm sure Mohit also would have heard that joke that for every round raised from any private equity fund, around 75% of it goes to Google and Facebook. So this is the kind of dominance which is having, which the tech sector is having right now. If you go to China, and Alibaba or a Tencent are having more than 70% market share. And this is not only concentrated to the tech sector. If we see the other sectors also, for example, the music streaming sector in India, Saregama and Tips are having literal monopolies in their own sectors, same way across the globe. So what I realized was, if we find out those, emerging and already established monopolists, which are capturing all the profit pools of the sector, then there is a lot of money to be made. So with this thesis, I started my journey of finding those kind of companies in India. And so this is like a basic framework of how we evaluate companies. So basically, the profit pools of the sector should be consolidating. Then the company should be having a decent track record of, say, economic profits and revenue growth. And then the capital allocation and the forensic should be top notch. And then we make a portfolio of 15 to 20 perennials. Also, one very interesting thing what we found out was trends are global. So as Mohit talked rightly about the Y2K boom, which happened in the 1990s, at that time, all the services companies were in a boom where an Infosys or a Wipro went up 100x. But obviously, cycles reverse, and every bull market has their new leaders. For example, in the 2003 to 7 cycle, we had all the infra commodity stocks and the allied banking sector doing massive scale ups, like in Jayaprakash Associates or a Unitech going up 800x. Currently, what I'm seeing is there is a massive uptrend in the real estate and the technology sector. So there are two, three factors to it. Post the pandemic, the Fed printed more money than it had done in the last 100 years. Right. So that money had to go to somewhere. So currently it is finding its way into the high growth stocks. So you can see the global platform companies, be it the tier two ones like a Shopify, Roku, or a Trade Desk, or the big tech companies like the Fang, making all time highs and reporting more than 40-50% revenues and earning growth. Same way in India, you are finding these new age businesses which are getting listed or which have already been listed for 8-10 years, making new record highs and outperforming the market significantly. So on that basis, what we try to do is basically we try to look at what the profit pools across all the sectors are. So currently, what our research said was, say in 2001, the whole of corporate India was earning around 38,000 crores, right? A mere 38,000 crores. That has scaled up to around 6.6 lakh crores.
Right.
Right. So it is almost an 18x jump. Out of that, the IT or the tech sector has the highest share of the profit pool, which is touching around 1 lakh crore.
Right.
But this is
So
still only 13% of
I'm
it.
just gonna interrupt you for 1 second. So
Yeah.
what you're really saying that there is a dominance of technology-led companies into the profit pool that is, that is working in India right now. So of
Correct.
this
Correct.
15-inch jump, we are seeing a dominant piece on the technology companies that are grabbing a large profit share, if not just market share of this place, right? Um, how does that kind of coming in from Mohit's observation in terms of the large kind of market space that has evolved? Is this really a reflection of the market space, or is it also a reflection of the internal technologization of companies that are happening? Could you throw a little bit of light on that?
Right. So if
Because
we
sorry,
see,
because a lot of these sectors that you're showing us are also not normally known as technology oriented sectors, right? But there is obviously something you're seeing here.
right, right. The technology sector right now, which is having, say, around 13% of the whole corporate India's profit pool, that mostly comprises of the IT services companies.
Okay.
The companies which were built around 1990s, early 2000s, which are the backbone of, India's software exports. So these are those kind of companies. However, what I see is there will be these new age companies listing, like a Nika, Policy Bazaar, or a Paytm, where they would shift this profit pools from 13% to at least 30-40%. And why I'm confident about this is, again, trends are global. So currently, if you see the United States of America, around 50% of the profits there are generated by these tech companies. Now they might consist of consumer tech companies or pure platform companies. So
Right.
I see similar patterns happening here. And why I'm more confident there is, most of these companies are growing at least 2x to 3x of the nominal GDP, which are in the old age IT services sector. And these new age companies, these are massive hyperscalers. These are growing anywhere, between 50 to 100%. So that's why I'm confident that going ahead, say in the next 7, 8, 9 years, when the Indian profit pools become around 17, 18 lakh crores. So then tech would have at least 35 to 40% of the profit pools here.
So really what you're saying, Satwik, is from 13% to 40%, right? So that's a big takeaway for our attendees today. Really
Right,
what
right.
Satwik is saying is in the next 10 years, you're going to see a 3x rise in the profit pools that are being commanded by either technology oriented or technology led. Am I right,
Correct.
Satwik? Both
Right, right,
kinds of
right.
companies.
Exactly.
And I think if you can throw a little bit of light on those pieces, it'll be good. But that's a big shift, isn't it? We're talking about a huge tectonic shift in that sense.
Right. So normally what we already also fail to realize is right now also technology is the largest profit pool in India. So a lot of analysts and fund managers try to overlook that, but it is still the most dominant sector in India if we see the profits, and it will only become stronger as the time passes.
Right, right. I think that's a key takeaway. Super. And what
Satwik, Chinmay, am I allowed to ask Satwik a question?
please.
Yeah, yeah, please.
Satwik, having seen the journeys of TCS, Wipro, Infosys, the traditional IT services businesses, right? I mean, I'm on the sidelines, right, with regards to their profit pools. I think the next decade is not about them. They will continue to lose market share. Because you have such new innovation happening, right? I mean, look at Salesforce.
Right, right.
Salesforce came out of nowhere. I mean, that was TCS's homegrown territory. And if TCS can sort of think that, Bank On will continue giving them 100 to 150, $200 million of EBITDA a year, I think they're living in fool's paradise. Because you have way smarter entrepreneurs building better tech stacks. And it's all about scale, right? So the only reason I'm working, say, with TCS today is because of, the legacy of 25 years. But
Correct.
but if there's a better product which is available for 1/10 cheaper, it'll of course warrant me to look there. So I just wanted to sort of ask you with regards to when you're talking about profit pool sort of contribution. Do you see these service companies still leading it, or do you think the likes of a Zomato or a Policy Bazaar or a Nykaa would be the larger contributors?
Well, how I foresee is it should obviously be a mix of both of them, because how the Indian exports build up was global innovation and Indian cost. Because basically what we were doing very efficient work at a very low cost, especially in this IT services business, or you can say the pharma business. So I think that need would be there, and there is a massive digitization wave happening. If you see the global retailers also, like a Walmart or a Costco, or the global banks like JP Morgan or a Bank of America. So their digitization process is happening very, very quickly. So, companies like TCS, Infosys, L&T Infotech, Coforge kind of companies, which are the forefront of the IT services, I think they should keep on doing well. Yes, I agree. Like companies like Salesforce have come upon, but still the market size is so huge that I think there is room for everyone to grow.
So,
So I think my concern was more with regards to talent pools, right? I'm guessing you and I are of about the same age. I passed out engineering in 2009, and at that
Right, right.
time it was a dream to get a job, at a Persistent Systems or a TCS or an Infosys with a
mhm.
starting annual salary of 3.5-4 lakh rupees. And it's like you've arrived. You can basically call your entire family and say, I got a job at TCS or Infosys or XYZ for 4 lakhs annum. Now is not the case. I mean, kids don't want to join these companies anymore, right? They
So,
are literally on the last pecking order priority. So, as much as I agree with you, I think the costs are going to get inflated like crazy, right? That whole
Right.
low cost center, that argument will not hold true, in my opinion.
Right.
so
Yeah, in fact, we are seeing
Mohit,
also, like a
Mohit
lot
and
of these.
Satwik, let me give you an insider's perspective because I've worked at one of these SIs, right? I've been with Cognizant for a long. I've led some of their markets as well. Uh, you see, what's happening is, you're right, Mohit. There is a huge productization wave that is there, right? And that is the sexy part of technology, if you will, right? But there is a huge legacy wave as well, which is completely on the services side. Make no mistake, these companies are reinventing themselves as well. So if you're saying India is not a low cost center, yes, it's not. But today, a huge chunk of the TCS talent pool comes from the Philippines, for example, or from China, for example, right? And when we were there, we were actually developing these talent pools, looking at the next 5 years, right? So there is a huge space across both of these sectors that are coming up. And I think if the recent ROEs are anything to go by, I don't see that squeezing in cost versus value provided that you're talking about, right? In fact, it's expanding to some extent. And remember this, whenever there is a sales force, they're going to need very, very strong system integrators to actually make it a part of your business. No product can come and just be installed into your business as is, right? So the larger the productization, the more the opportunity for system integrators as well. So there's two there's two to tango out here, right?
True.
Cool. um Mohit, I had another question for you. Coming off from Satwik's perspective on the value creation that's happening or the profit pools that are growing. What do you think is the main reason behind this massive value creation in the tech space that we're happening? So are the valuations A, justified? B, therefore should we participate in it aggressively, or is there time? And see, why is it so huge, right? Why is something like a Nika, which was nothing 10 years back, today valued at the amazing valuation that it is, right? And it's left the kind of legacies of people like Coal India, Tata Steel, and all of these guys behind. And you see this new kid on the block really taking a huge chunk of the valuation. Is that sustainable?
Um, having come from the capital markets, right? I've learned so much from the capital markets, having worked at a hedge fund, seeing it go from a billion to going back to 150 million in the crash. I've seen a few market cycles to tell you that these valuations are just outrageously unjustified, right? If price to dreams was a ratio, then maybe yes. On a P to D ratio, Nykaa and Paytm are the best stocks on earth. And Warren Buffett very famously said, right, that an IPO is always going to be the worst time for you to get into a company because it's priced by the management for their own offer on a price that they think is right, which may not always be right for you.
Right.
So, and the unfortunate part, right, and where corporate India is sort of losing its track, and this is purely the greed of iBankers, is just the outrageous pricing on some of these IPOs, right? I mean, look at Fino, phenomenal company. Rishi's a great guy.
Yes.
But all you have to do is just price it right. Seeing that IPO crash 10% on day of listing is sort of heart-wrenching. Look at Car Trade. Again, phenomenal business proposition, great family that run business, a clutch of the world's best private equity investors on their cap table. The stock is down 34% from listing.
Right.
And bear in mind, the same will happen to Zomato also 2 quarters later. The same will happen to Policy Bazaar 3 quarters later. Because you need to leave something on the table. I think the tech IPOs, see, we are like in a great gold rush today. Everyone thinks that market's going to correct, but it's actually not doing so. So they think that before it corrects, let's get into an IPO and let's get ourselves out there so that then we, this is it. We have arrived. The IPO is done. This is the final thing, frontier that we have to conquer. But people forget to think about the fact that IPO is just the beginning. You need to have successful quarter after quarter growth. I mean, look at DMart, right? Yes, IPO was not ridiculously expensive. It was expensive, but there was a phenomenal execution track record for 7 years prior to that. And then they maintained that quarter on quarter, which is why the stock today is at, where it is. So my sense is, it's tough to say which IPO is rightly priced and which is not. But quarterly results are a fair indicative number. I don't personally think this trend will last very long because there has to be some sanity that will sort of prevail into the markets. What is that event which drives that sanity? That's something which you and I will have to wait and see.
Okay. So two key takeaways for me from what you just said, Mohit. One is IPOs are, and we know this in terms of, value investors have highly kind of regarded this sage advice from Buffett that, IPOs are when the management is, throwing a kind of a curveball at you. It's up to you if you want to take that shot or not, right? Yeah. That's number one. Number two, consistency of performance is key in terms of holding up these valuations. And for example, Zomato, for example, has declared its first quarter results, really encouraging. Market has rewarded them, right? But they're still in loss, of course. But that's a different story altogether, right? Coming to you, Satwik, is there a way to understand this valuation piece a little bit? Is there something you'd care to share with us?
Right. So before that, what I would like to take you through is why all this is happening, right? So all these unicorns and decacorns which are getting made, right? I think they have only one man to thank, and that is Mukesh Ambani. What happened with the Jio movement was basically the prices of internet went to less than 70 rupees a GB. I think that is lowest in the world. And the internet users surged to around, around 700 million in 2020, implying a penetration of around 50%. And still, if you see, we are like very, very under-penetrated, across all the things which are internet related. Say, for example, in my industry, the retail AUM as a percentage of GDP is around 16-17%. In US and China, it is much, much higher. The smartphone penetration is around 40%. But if you see, trends have started changing right from 2015-16. So I took a few snippets from the Nykaa DRHP. So how Indians have started shopping differently. From around 75 million, they have crossed to around 180 million. Similarly, the Zomato DRHP mentioned from less than 75 million. Right now, there are more than 90 to 100 million food orders daily. Then there is that UPI stack. So now what is happening due to this is, right, all these tech unicorns are getting made. And these are not only in the platform space, these are getting listed globally also. For example, the number of Indian SaaS companies, they have grown more than 5x. So if you look at the Freshworks IPO recently, a very good company doing more than 300 million revenue, 45% plus growth. So there are a lot of high quality companies, also coming in there.
Right, right, right. We see
Right.
that.
And so one more thing which I would like to focus on is what this COVID wave had done to basically the Indian tech sector. And this is not only the Indian tech sector, because the global IT services sector is impacted from here. So basically, Accenture guided for around 18 to 20% revenue guidance at that base.
Mm-hmm.
And so, what exactly had happened was, at a massive scale, COVID has led to capex turning into opex. So earlier, what used to happen was, most of the companies used to set up their own IT services, infrastructure, and then go ahead with it. But right now, because the shift was so sudden, everyone turned to the cloud, right? And to basically pivot their business towards the digital model. So if you see conventional businesses also, like a Walmart had around only 2.6% of its sales online. It has
Mm-hmm.
gone up to more than 10, 11%.
Right.
Right. Home Depot from 6% has gone to 14%.
Mm-hmm.
And these are pure, brick and mortar stores.
Yeah.
And if you
Traditional
see,
business models.
yeah, total traditional models. And if you see, more than 100-year-old banks also, like a Bank of America, so their digital growth has happened at, more than 40-50%. So now this has led to a lot of, these IT services companies scaling up. So that's how, I'm seeing that there is a multi-year mega trend in the happening. And if we have those
Right.
large profit pools along with growth, so a bit of a premium is justified here.
Right, right, right. Got it. Now this is helpful, Satwik. So two kind of again insights from here, right? A is bricks and mortar is not brick and mortar anymore. It's getting technology, digitized pretty fast, technology friendly pretty fast, and larger and larger pieces of revenue and profit are coming on the digital channels. This is of course opening up a whole different space for SIs. So the demand does not seem to kind of dampen there, right? It's only going up. Um, Coming to the ITI growth opportunities, Fund One, Mohit, you have direct access to innovators in this country on the product side, right? So what Satwik said was a little bit more on the service side, but on the product side, you have direct access to innovators in this country. What is your really strategy to incorporate, this kind of incubate this fund, or to pick out the best investment for your investors, out there? How do you find this? Because it's incredibly difficult at a fairly early stage as well, right? So is that kind of deals you're going after, or what are you thinking about in this space?
I think, Chinmay, I've been sort of venture investing for almost the last decade here. And my fundamental learning or understanding from this space is um, bet ahead of time, be a dreamer, and try and catch a trend before it's even in vogue. So if somebody tells you that, hey, you should invest in an AI ML company today, you should actually question it and say, hey, listen, it would have been a great investment if I would have done it at 4 or 5 years ago. But today, literally every second, third company can have a ready plug-in AI model, right? So I mean, IBM Watson has done a phenomenal job. So I think for us particularly on not just in my personal portfolio, even on the fund, we've done 10 investments. On our deployed capital, we have marked to market up almost 5.5 times now. One of our early investments was in the EV space, where we took a call on not just a EV two. So we took a considered call that are EVs coming to India or to the globe? Absolutely. This is way back in 2018. And then we said, okay, two-wheeler EV adoption will be first, then followed by the four-wheeler adoption. And then we realized that, manufacturing a two-wheeler EV or, assembling a two-wheeler EV is actually very easy. Anyone can do it. So what's the value addition of saying that I'm going to bet on a EV manufacturer? So today it is Ather Inform, tomorrow it will be Ola, and day after tomorrow there'll be somebody else. Maybe Zomato might start its own EV. It's
Right.
as simple as that. Between the three of us, we can start an EV company tomorrow. The number of moving parts are 6 versus 188 in a IC powered bike. So we
Right.
took a call on playing a horizontal versus a vertical. So we are investing in the largest technology platform for EVs and two-wheelers. This is an operating system called RevOS. It's like the Android for all de facto EVs in India. So 99% of all two-wheeler EVs in India are currently powered by RevOS. They are also now going to be the largest charging infrastructure providers in the country using Bolt, which is their proprietary charging technology.
Right.
And that's the kind of call we took 3 years ago, right? We've done the same thing in drones, where we took a call on the drone space, more so with medical delivery using drones. This is a call we took 1.5 years ago, and now the drone top policies come in place. I did something very similar in the e-pharmacy space, before the 1940 Drug and Cosmetic Act came in place. So I think in India, it's very important that can you identify a trend before it takes place and be able to sort of identify the best set of entrepreneurs who are working in that particular space and then go out and back them with all the capital that's available. And that has worked wonders for us, at ITI Growth Opportunities.
That's super. That's very, very interesting. What an interesting take on the whole EV space, because the minute one says EV, one pictures a two-wheeler or a four-wheeler as basically a mobility product. But you've taken a very, very different angle there in terms of doing the platform play instead of the product play. Super interesting. So thanks guys for sharing those insights. I'm going to now open up the session for question and answers from our audience. So those out there, if there's any question you have, please raise your hand and we will enable you to ask the question. Meanwhile, I have one question already from the audience that's come up. And that question is for you, Satwik. Here goes the question. Yeah? You've mentioned before that you're bullish on old age companies adopting new age tech. Could you throw some light on that? Because that's a space that's often missed out.
Right. So normally in our conversations today, we are talking about all these new age platform companies which are coming with the likes of Shopify or Roku in the US or the Zomato or Policy Bazaar in India. But what we tend to forget is those old established institutions, how they are pivoting towards tech to take advantage of these tech boom, or for that matter, survive and maintain their market share. So, for example, Domino's in the US is right now doing 75% of their sales online. The Indian entity has got more than 5 crore downloads. And it was a conventional delivery, a conventional hub and spoke model initially. Starbucks is doing more than 25% of its sales, online. Coming to some of the companies which we are either holding or which are in our watch list. So companies like Asian Paints, so they have spent more than 120 crores in their R&D and IT spend, along with their investments in supercomputers and ERP since 1970s, which has already been well documented. Small cap pharma company, more than 100-year-old pharma company, JB Chemicals and Pharma. So after the takeover by the new private equity group, the KKR group, so they are right now investing in the Beyond the Pill initiative, where they are providing tech-enabled solutions and digital approach to the chemists, basically.
Right.
Right. Another age-old brick and mortar company like a Polycab, right? It is into wires and cables, right? They are doing more than 70% of their sales via online dealer portal, right? So this is a massive shift. Which is happening.
Right.
Piramal Enterprises, so they have also leveraged e-commerce very, very successfully, and now they're having direct reach to around 2 lakh outlets.
So Satwik, is it just the channels that they're using in terms of digitization, or is there anything else they're doing as well? Or are there just sales happening online? Is that the long and short of it? Or is, for example, someone like an Asian Paints, are they developing different digital pieces as well?
So what is happening is sales is obviously happening, but along with sales, once you have that app and you have that data with you, So you can do a lot of other things also with that. For example, you get to know, what would be the approximate demand in this area, in this locality with me. In case of Asian Paints, in case of Dr. Lal Path Labs, they get a ballpark idea that 3 months down the line in this area, this much clientele might require another home testing, so they can do their logistics like that. In case of a company like Titan, can you imagine around 20% of their sales are happening online through this video conferencing? This could not have been imagined pre-COVID. So along with sales, there is also a change of customer behavior, and then that can be utilized for further sales, basically.
And just to sort of strengthen Satwik's argument, I like to just add in there. So, a few years ago, we were looking at a large startup fan company. It's a Bombay-based startup fan company, which was claiming that we are doing BLDC motor fans, which are smart IoT fans, and we should be raising money from that. And we did this whole survey of just the fan market, and there was of course the Ushas and the Bajajas of the world, which were age old fans. Like I think our grandparents also have probably consumed those brands.
Right.
But what was interesting is that all those brands have actually adopted BLDC. A lot of those brands are already IoT enabled. So just to sort of strengthen what Satwik is saying, right? That I think age old companies are also it's interesting that startups are being allowed to sort of create a category, while age-old companies can then come and leverage their distribution network, their learnings, and either acquire that category or build something on top of it. Look at what's happening in the D2C brands, right? It's incredible how you have so many 50 to 100 crore D2C brands being built, and then and I'm particularly talking about the baby and mother care space, because we've looked a lot at that space. Dabur realized that, hey, listen, this Mama Earth, Mom and Co, there's just a lot happening. Clearly, there is something that's going wrong, that's going on in this category. Why don't we do a baby segment? And Dabur, I kid you not, in the last 18 months, Dabur's baby segment, if you look at Amazon ratings, is right up there with the Sebamed or with the Mama Earth or Mom Earth. So I think, if you can capture data, you already have, traditional businesses sit at such a vantage point because they have known their customers for years. It's just that they were never able to talk and communicate to their customers right. Technology has bridged that gap, and I think it's incredible if you can build a layer on top of age-old businesses, how much can be done.
Right. This is incredibly interesting. So that really tells us that when we're looking at companies in the listed space, it's not just the startups that we need to look for in terms of the technology space. There are, if you will, there are startups within these large conglomerates that are being built. And those could be a very, very interesting investment opportunity as well in times to come, right? There's a couple of questions we have from the audience. So can we enable Sarang wants to ask a question? Or Jugal is here?
Yeah. Hi, can you hear me?
Yes, we can, Jugal. Go ahead.
Hi. Hi, Mohit. Hi, Satwik. So my question was for Mohit. You mentioned a company like Reverse, which is, leading the charging facility in the EV space. I was wondering if you have any such other examples in other sectors besides EV, that is probably leading the charge in an interesting space like that.
Do you want me to particularly talk about companies from our portfolio, or in general you're asking me?
No, in your portfolio, in the ITI growth opportunities portfolio.
So I think we like to believe that every business that we're investing in at some point of time will become a market leader, if not number one, but at least between the top 2, 3, 4. Let's talk about drones, right? So Red Wing Labs, which is our drone investment, they work with Apollo Hospitals, with Mahindra Group, with multiple state governments, right? So they're creating a new category altogether, which is helping you move medical devices, medical applications from point A to point B using drones. And the efficiency levels are over the roof. And when you go into the hinterland of India, right? So you may wonder, within Bombay, will I ever see a drone flying by? Bombay is not my target audience, right? Or Delhi is not. But if I go to Assam, to move from, even 20 kilometers north of Sikkim or Assam it can take you anywhere between 1 hour to even 5 hours, while my drones will do it in less than 15 minutes. So if somebody is in excess need of a critical life-saving drug, I rather have my drone fly there through the Naxal infected area versus, having a person go by road. So I think, you have like we another investment of ours, Hubhopper, which is the largest podcasting company in India today, completely built in India. Besides being an aggregator of podcasts like how your Spotify's and Ganas and Savans of the world are, this is the largest podcast enabler where anyone can go live creating their podcast in under 2.5 minutes. And your podcast will be live across 7 different platforms, including Hubhopper, including Spotify and Apple Podcasts. So I think it's important that you identify a niche, go down into that segment, and if you can bet right on the people who are implementing. Like for me, one of my biggest learnings of local Banya was I caught the segment right. I knew e-grocery is going to happen. I knew e-grocery is going to be really big. But the people that I caught were probably not the best there. And in the same time, Big Basket is where it is, or Grofers is where it is, or so many others which have gone up to be a billion-dollar business. So I think if you can get your timing, product market fit right, your GTM right, your people right, you will always end up having a pretty decent portfolio.
Super, that's helpful. I'm going to jump on to the next question we have from the audience in chat. There's a question from Bina, and her question is, so do the old brick and mortar companies have an exit strategy for the quality startups that they're building? Perhaps this is one for you, Satwik.
Yeah. So I think you're mentioning whether, startups can sell their companies to the old age enterprises. So that is, very much happening right now in the listed space also with, Reliance going out in the all out acquisition spree.
I think, Satwik, the question is, do the old brick and mortar companies that are building up kind of mini startups inside them, do they have an exit or a listing strategy for this, or any kind of an exit strategy for it, or not? So it's the other way around. So if Reliance were to build Geo Infocom, would they list separately?
Right. So normally what I have seen, especially the companies in my portfolio, is they are using technology as an enabler. So, it is not a separate arm or something. Unless if I see in companies that are outside my portfolio, like an ITC, which is developing an ITC Infotech, which might get listed, like it is just crossing a 3,000 crore kind of a revenue. But most of the companies which I am tracking, so they are using, it is as an enabler rather than as a different revenue source.
So, Satwik, I'm guessing everyone in the audience here is going to ask you, when will ITC ever move from the 220 to 250 band? Irrespective of whatever they do, somehow that stock never gives any return.
Yeah.
And vice versa, Satwik. I mean, Bina is another question there, that if you were to look at the reverse way that you're talking about, the acquisition bit, how do you see that kind of shaping up?
Right. So there are two interesting things happening. One is these large conglomerates, right? So they are right now realizing that we need to, get into some new spaces. For example, Reliance has gotten into an all-out acquisition spree. Same way with these large, companies in the consumer space, like an Imami doing a Beardo, so on and so forth. But another interesting thing which is happening is these VC funded kind of companies which are becoming like a Thrasio for the Amazons, or that matter, that also is playing out very, very strongly. Companies like Evenflow, which are trying to collate all the quality sellers on Amazon. But we'll see how it plays out. But in the listed space, for sure, it is happening with companies like Dabur, Imami, or a Reliance doing it.
Sure.
Chinmay, just to add to that, right? I think the question will have better answer if we sort of segment it, right? Large businesses which are developing or incubating startups for open world or for themselves. That's how you'll have to segmentize the question. So if I'm a technology startup which is building something which only caters to the large organization that I'm at, say Asian Paints, right? So I'm a technology team which is building a phenomenal tech product only catering to Asian Paints.
Right.
Then there is no way that startup can get listed. Then there is no way any external investor can buy it, because in a way it's a captive unit, right? But if you're building something which is sort of going out there and is able to cater to multiple people, it could be a technology product or it could just be an all-out new product altogether, right? Like how the Sony and Akai strategy way back in the 90s, where Akai was actually a startup within Sony, because Sony realized that, hey, my brand perception is premium. I can't let that dilute. Let me do a sub brand like a Akai or a Sanyo, which will go out and hit the masses while my parent brand is protected.
Right.
I think Marico, for me, Marico is that seat of innovation, at least when it comes to FMCG or D2C.
Right.
I know for a fact they have been very lenient with their senior management and said, listen, build out teams, build out new products. It doesn't matter even if you fail. Let's keep innovating inside. So Marico is definitely there. Of course, Reliance is a different beast. And having sold Grab to them, I know they are in a different world altogether.
Right. No, that's pretty interesting. But also coming to the earlier point that you said, captive or built for the world. Then there are the pivots that happen, like an AWS kind of a product, right, which was built as a captive product, but eventually went out, and is serving the world today. So that's an interesting space as well, and that's an interesting opportunity. We have another question coming up from Sarang. Sarang, could you please ask the question?
Yeah, so my question is to both of you. So with the speed of deals and high valuations for unproven companies and lots of money around, do you worry about the governance issues at the companies?
Satwik, do you want to go first, or should I go
You
first?
can go ahead, then I'll take it up.
Okay, I think governance issue is really not as prevalent, right? Because every deal that happens, whether it's the quantity of money or the speed at which it's happening, there are multiple checks and balances before every round happens, and more so at least with the listed sort of private equity and VC players. Like all our funds are SEBI regulated, right? So SEBI asks us a bunch of questions. We in turn ask 10 times more questions to our startups. Our legal due diligence, financial due diligence, all are in place for every transaction that we do. So I don't perceive any sort of I would say carpet bombing in that space. People have realized that paying GST or not cutting corners and paying full income tax is the future. We're very far away from the 80s and 90s where compliances were not really that important. Today everything is so digital. Half my compliance work just gets done in less than a day and a half. So I think compliance-wise, most companies, at least not just where we are investing, I'm saying even the ones we are evaluating or our peer funds are investing, seem very decently compliant. But that said, I mean, you had a ILFS and then you had multiple other very large, fiascos in the listed world where the KPMGs and the PwCs of the world were auditors. So can that happen? I mean, of course, it can happen anywhere, right? But
Right.
I would say at least the groundwork is right.
In fact, you mentioned compliance, Mohit. That's been a very, very interestingly digitized, fairly quietly. Not very not very sexy, but very interesting space where the likes of Zoho and Freshworks and all of these guys, they've really come in and put those systems and processes into place, and even a small organization or a small startup can take advantage of that and be compliant the way that a big company otherwise could be.
Exactly.
So that's, I think, really kind of changed this. We have another question coming up from Palak here.
Yeah, hi. So my question is, how can technology business build resilience against the changing customer behavior? So it's for both of you.
Right. So normally what I have seen is, if you are so there are two kind of technology businesses. If you talk about platform businesses, right? One would be the pure play verticals like a Naukri.com or a Policy Bazaar, which is transitioning an offline business to an online model, where offline it used to take a lot of time and was very inefficient. Or there would be horizontals like an Amazon or a Facebook, which capture the length and breadth. So if I had to build a technology business today, I would never ever compete with an Amazon or a Facebook. Like that's what my normal thinking is. I would try to take an offline problem, like say Sanjeev Bikhchandani did when he saw that all the job posts are getting into the classifieds, and if he builds out a portal like that, then it would be very very beneficial, and it would actually solve a problem. Same way with Zomato, when Dipinder Goyal, I think, was in Bain, and he saw that ordering food is very very tough. He collated all the menu cards and put that into one portal, and that's how Zomato grew. So solving one problem, but solving that perfectly. I think that's how businesses can build resilience rather than going haywire and competing with the likes of an Amazon or a Google or a Facebook.
Right, right. That's an interesting take as well. We have space for one more question, and I've gotten it here. This one's for Mohit. What's your advice to the cohort of tech entrepreneurs today? What key fundamentals do you look for, or what should they focus on to create a thriving and sustainable business, right? So you mentioned the ratio of valuation to dreams. How do we get out of that trap?
I think in the early stage side, valuation to dream or the price to dream is the ratio that you should be in. Sanity starts prevailing as you grow bigger, as you start maturing, right? In the 0 to 1 play, right, which is when you just start off your dream journey and say hit about a 30-40 crore valuation. That part is you should be a dreamer, right? And there is no method to madness.
Right.
If your heart is right and if your ethics are right and if you're building something which is sort of here to stay and is relevant not just for today but even for the future, then there is enough reason for you to just go out and build it. Whether you raise your first round at 10 crores or 20 or 30 or 40 crores, that is upon your luck and whom you're in conversation with. But after that, I would strongly urge startups to sort of start looking at building the right blocks for creating sustainable long-term businesses, right? It's very heartwarming to sort of see the amount of job creation that startups have done over the last 5 to 7 odd years. And it'll be heart-wrenching to see those jobs getting lost if the market turns.
Right.
Right. So if say, hypothetically tomorrow there's some, Fed decides to screw us all over and, start liquidity squeeze, the sentiment changes. Yeah? I mean, economy works,
Yes.
It's like a wheel. It constantly runs with the grease, right? But if you remove the grease, which is the sentiment, suddenly everything can come back to stopping down.
Right.
And at that is the time when, you'll actually be able to see where the real might of some of these companies are at. This crazy hiring that's happening today where, I've heard of, Bangalore is a shitstorm when it comes to hiring today, where 21, 22-year-old kids are working with 70, 80 lakh rupee packages.
Right.
I mean, I kid you not, guys. All of us will feel like, can we reverse our ages and, go back to college and, just make better life choices? Because if you are making 80 lakhs when you're 21 or 22, it's tough to, you sort of set up your lifestyle to that. And if say tomorrow you lose your job or shit sort of hits the storm, where do you go from there? I think the building blocks will definitely be questioned, but not in the 0 to 1 stage, more in the 1 to 10 stage.
Right. Absolutely. I think that's fair and sage advice, Mohit. Well, I hope well taken by all of us here as well. And sometimes it does feel like can one go back and re-engineer your journey again, right? So that's an interesting piece as well. Okay, so I think that's brought us to the end of the time that we have. There's a couple of more questions, and I'm afraid we're going to run out of time. So guys, if you have any more questions, please feel free to email us or get in touch with us, and we'll try and answer to the best of our capabilities. Thank you so much, Mohit, Satwik. Really appreciate your time. Phenomenal insights out here. I think great nuggets for everyone to take back. And I think hopefully we'll be able to join you in some of our kind of investing endeavors and hope to allocate some amounts there as well.
Absolutely. Thank you so much, Chinmay. It's been a pleasure and pleasure meeting you too, Satwik.
Thank you, Chinmay. Thank you, Mohit. It was very insightful.
Super. Thanks so much for joining us. Thank you everyone who's here, who's joined us. Appreciate your time on a Saturday. Thanks a lot. Till I see you the next time around. Yeah. Bye-bye. Take care.